Hello and Happy New Year. Today is the first day of January 2014. And with the new year now in play, let's take a look at three different charts on the yearly time frame with each period that of a year, 100 periods for 100 years worth of data within the Dow Jones, gold, and silver. And concluding the video with some predictions, but more so odds of price movements in for this year. So let's get this started, and we'll start within the stock market, which ended the year within the Dow at a level of 16,577, up nearly 3,500 points for the year. As you can see, a decent size green candle. And the 26.5% gain is the largest it has had going back to 1995. For the last 100 years, it is up about 20,000%. And when the percentages are this high, it's just easier to take the last two digits off. It's up 205 times higher, roughly, from that time frame. Okay, so we've gotten that taken care of. Let's talk about the trend. Let's talk about the likelihood of where this should be going. And I like this 18 average band to help indicate trend and correctionary phases as well. Markets correct one of two ways, either through time, as we can see in here. They can correct through price. And what I like about the 18 average band is you can see, oh, it's breaking out in here. And then this is where you notice the correction. That's a small correction, but one that is still that. Large corrections is when the 18 average is declining. And that really hasn't occurred too much. This is a fast move, and that's still a large correction, but it's the only one it's really had within the last 100 years. All right, so after this gain higher, let's look at an interesting pattern where it made this low, which was the lowest low since back in here. That was about a decade low. And then it proceeded to make a higher high above this high. After that, a low lower than this. So for one pattern of a higher high and a lower low. Oftentimes that indicates a big move is occurring. So what happened was you had a gain in the sideways movement. Either the run was over and the prices would go down, which obviously did not occur, or a large move higher or a significant move higher. It wasn't significant, it was large. And when it broke past this resistance, it was pretty much off to the races at that point. And similar as it was then, we can see the same thing here. You make this high and you have your first correction to the band, which was not seen since it lifted off back in the 82. The 1987 crash was merely an intraday movement, considering it still had a gain for that particular year. And after this low, it went from like a 12,000 base high to a 14,000 base high, thus a higher high and a lower low. Just like in here. Higher high, lower low. Does this tell us a large move is about to occur? Well, it looks as if that's now probable. You've broken these two layers of resistance, breaking above this band, which has been in play obviously in here and throughout this run as well. So from 2008 to 2012, it was correcting within it, breaking free, of course, in 2013. Now the size of the gain, we can just draw a little a box, say, if we do the size of this move, well, that's from 6,000 to about 12,000. That's double. Double 12,000, 24,000 as really a small target if this thing gets going. How many periods would it take? And that's, I would expect 1 to 6 is the general type of movement. If this was like a different chart, say a short-term chart over a couple days or so, and the bottom number was, we'll say, I don't know, 20, and the top number is 22, and a decent 10% gain. I would be expecting another possible move up to the 2250, 23 level maybe, but definitely further upside action because the trend is that of higher. The last thing I want to point out is when you're making the pattern of higher highs and lower lows, and it's only been one higher high and one lower low, that pattern can still come into play. 4, if this doesn't go up that much, meaning it doesn't break 20,000 even, and the movements bring it back within this band where it either A, continues to go lower or even goes sideways, then I'd be considering that breakout a possible failed breakout for, of course, the fast move in the opposite direction. As right now, it's looking as if the failed breakdown in here is going to cause a fast move up. So those are the main things to consider, but it wouldn't be that large of a surprise if the movements get higher. Look at the fundamentals of how our currency is created. It's not a surprise if it multiplies a lot larger. Thus, this is another indicator of an inflationary measure. Most people think gold, of course, would be that of the inflationary measure, and this is the gold 100-year chart, which has a bunch of nothing in here, bunch of nothing in there. But before we talk about that, let's go through the year, which closed at 1205, down 470 for the year, or that of 28%. The largest decline in percentage-wise going back to 1980. For 100 years, it is up 5,730%, which is about 57 times. Of course, significantly lower than stocks, but it trades a lot different. It did nothing here as gold was pegged at $20 an ounce approximately. And then it did a whole bunch of nothing here after it went up from 21 to 35. Pretty much just taken away people's values of by fixing the price of gold. The London gold pool was around here. It wouldn't survive, had a small glitch there, and the thing started really in 1968 with moves from 35 up to 800 and change. That's a pretty significant size move. Obviously, it's had a significant correction for this period of time here. From about 1982 or 81 to the breakout in 2002, 2003. So 20 years of a significant correction. Quite high. Therefore, it's been a little over a decade now since this has been in a bull market. Yes, it's had a large down move. Areas to consider: is it going to go sideways for a while? Is this that correctionary move that if we start to see action back in the 1600s, we know this thing get going good for gains to another leg higher, 25, 3,000 possible time frames. Different things, of course, worth considering. After all, this is an inflationary measure as well. And it's only up 57 times. Does that give reason that, well, maybe gold's not as good as stocks and that's the way it is, or it's undervalued compared to stocks and potentially a better long-term investment? Let's finish this off now within the silver chart, and pretty much the same sort of deal, just only down 1092 for the year, 36%, its largest decline since 1981. And it's down now since 18 average. The Fibonacci level, of course, which is 1816, the bottom, 1821 for the year. Its lows occurred at the summertime, as did gold as well. But it's obviously retested it very close, piercing just $1.20 above it now. Okay, so there's really not too much more to say about this. It had a long sideways correction. It had a long price and sideways correction in here. Same thing as gold. Is it due for another one? After a correction of this size, I would be expecting a bull market at least larger than that. And it's been about 9-10 years, of course, for silver. I'm going to finish this off now with the odds for what I would expect for the year. This is silver biting odds like it would be set for like a bookie site. I am not a bookie. This is for entertainment, educational purposes only. Over under, I think the highest price has a 50% chance of going above 26.15. I think the lowest price probably has a 50% chance of going around 15.97. The closing price at 21.55, so I'm expecting a gain of about 8%. Volatility for the year, I'm expecting around 64%. Will the price see 25 this year? Minus 130 is defined as a favorite. You would normally bet 130 to win 100 profit. And here, 100 to win 110 profit. So I think there's about a 52% chance that we'll see 25. And chances we'll see 30, 40, even 50. It's okay, so maybe there's about a 20-something% chance that 50 will come. And even about an 8% chance of 100 with a bunch of other levels as well. Largest move in a 24-hour period. The largest up move, I think, will be around 5.15%. That's high minus low. Difference on the low from a 24-hour period. Down move, they usually occur larger, so I got negative 7% there. The largest monthly gain will occur in the first 3 months of the year or July. Those are usually the gains, so I think there's about a 47-46% chance that those 4 months will be the best gain. The largest loss in these 3 months, April, May, and June, those are usually the worst months for silver. Number of months with positive gains out of 12, 6.5, meaning I think there's about a 48% chance that there are 7 or more gaining months. Largest monthly volatility, 27%. The smallest at 9. Year-end Fibonacci, 59%. Prop bet, AFC team points in the Super Bowl, minus 4.32. What that means is if I take the whatever amount of points that the team in the AFC gets, I subtract it by 4.32. Whatever's larger between the silver price and the score wins. Silver, you just add 432 to the silver price. U.S. Mint Silver Eagle sales for 2014 at 47.555 million. That would be barely a new record, so I'm predicting that it's got a better than a 50% chance that more silver will be sold. Will the dollar collapse occur this year? Okay, it's about 3%. And a collapse is defined as the U.S. dollar not being legal tender and not being created/circulated at one given point. Forever, that is, too. It can be December 30th, it can be January 17th, but it's probably not going to happen this year. Thank you for tuning in, and have yourself a great year. Bye-bye.